Business unusual has been something that intermediaries and insurers have been talking about over the past few years, because the role of everybody in the insurance industry is just changing at a rapid pace. I'm talking to Tony Webster, who is the head business unit corporate at Aon South Africa. Tony, thank you very much for joining us.
You're welcome, Jonathan.
Let's talk about the intermediary. How is their role going to be evolving over the next 5 years?
Jonathan, I think what has happened from an intermediary point of view is gone are the days from a pure transactional point of view. I always use the analogy that the broker's the peanut butter in the sami, joining or making the sami between insured and insurer. I believe those days are still effectual, but I see that role going forward from a transactional point of view to a partner, and more specifically from an advice point of view. Perhaps I could elaborate a couple of seconds in that.
Go for it.
The Aon Global Risk Survey has identified that across the entire globe there are 10 risks that concern or keep CEOs awake at night. And more specifically, no fewer than 7 of those risks are uninsurable. If I can take 2 minutes just explaining those things. Number one, the biggest risk concerning a CEO today is economic slowdown and slow recovery. Think about it, uninsurable. Damage to brand and reputation. Part of that could be insurable in the event of a claim from a reputational point of view, but by and large, it is a risk that requires an intermediary to partner with them from an advice and a risk management point of view. Carrying on, accelerated rates of change in the market conditions. Pretty scary, especially if you take the conditions in which companies of today operate in. Business interruption, okay, there's no rocket science behind that. That is insurable, but it's a risk that concerns the CEOs and CFOs of today. Increasing competition is a massive risk. If you think about it, the world is getting smaller, the pot of cash, the pot of clientele, the pot of customers is getting smaller. We've heard in this very last session, and I'm sure we'll continue to hear during the course of the coming days, cyber attacks and data breach, massive risk as well. Commodity price risk as well. To my earlier point, the global economies are getting smaller. Commodity price is a massive risk, which has a direct effect on the next risk, which is considered cash flow and liquidity risks. Pretty scary. Failure to innovate and meet customer needs. Again, it's a massive risk that's keeping our boards of directors awake at night, uninsurable. And last but not least, in terms of the top 10, we talk about regulatory or legislative change. So as you've seen, Jonathan, most of these risks that are keeping insureds awake at night are to a large degree uninsurable. And that's where I believe the role of the intermediary going forward is to one with partner, to add value to a client, and to provide their risk and the associated risk management.
Tony, thank you very much for joining us.
You're absolutely welcome.